If your mortgage is coming up for renewal in 2026, there's likely two major issues that you're facing. One, if you're coming out of a 5-year fixed, you signed at historic COVID lows 5 years ago. This means your 1% mortgage is turning into a 4% mortgage. This is going to mean higher interest, higher payments, and less cash flow, which is going to compound the second problem that you may be facing, which is debt load. Canada currently has one of the highest household debt to GDP ratios in the G7. This wave of mortgage renewals at 4 times the interest rate is not going to help that problem. So if you renew in 2026, you need to get informed. In 5 minutes, I'm going to take you through what a renewal is, how you actually renew your mortgage with a new lender or switch your mortgage, and when a renewal might not be the best option for you and you should potentially look at a refinance. Let's get into it. So a renewal or a switch is simply keeping your same mortgage balance and remaining amortization and moving to a new lender. Why would you do this? Everyone always goes to interest rate, and that's true. You can get a better deal when you switch your mortgage, but you should also look at things like prepayment privileges, portability options, structuring of your mortgage, and tailoring your mortgage to your life plan for the next 3, 5, 10 years. Think of it like switching your phone plan. Same product, but better service and potentially a better price. So you want to switch your mortgage. That's great, but how do you actually do it? You want to start the process about 6 months before your renewal date. This gives you time to consider your future plans with the home and weigh all your mortgage options. If you like what you see from a broker, we can get you a rate hold for 120 days, and if rates go down, you're entitled to the lower rate. The process is similar to when you first bought your home, but simpler and faster. We will require a new application and an approval, but I can work with you to get all the docs required in probably about 30 minutes. After we submit this application and get an approval, we line up the closing date of your new mortgage on the renewal date of your old mortgage. This ensures you pay no prepayment penalties and your transfer is seamless. Each situation is unique, but we're often available to get this done without legal fees or appraisals. If you want to know what documents are required for a mortgage renewal, comment docs below. And that's it. Your new mortgage takes over your old mortgage and you carry on with the same balance and remaining amortization. Simple. However, a major issue is that if you signed that mortgage 5 years ago, you're coming from a 1-point-something% mortgage to potentially a 4-point-something% mortgage. And even though your balance is smaller, your payment is going to be significantly larger. This means higher interest expense and less household cash flow. When you combine this with the fact that Alberta households are already carrying one of the highest debt to GDP ratios in the country, we could be in for some problems. And this is why a simple renewal may not be your best option. If this new higher payment is something that you may have trouble handling, a refinance is a great option to help you out. With a refinance, you can lower your monthly payments by extending out that amortization. You can keep the balance the same, but extend from say 10 or 15 years back out to 25 or 30 years, lowering that monthly payment. You can also increase the balance of that mortgage and pull out equity from your home tax-free and use this equity to pay out high interest debt that you may have. So not only is your mortgage payment going down, but you're consolidating bad debt into one monthly payment that you can manage much easier. This means less interest expense, higher monthly cash flow, but more importantly, less stress. So if you're carrying credit card debt, line of credit debt, or high vehicle payments, this can be a fresh reset button. Switching your mortgage is about optimizing your mortgage. Refinancing your mortgage is about optimizing your financial position. So how do you decide if you should switch your mortgage or refinance your mortgage? Here's a simple framework. If you have stable finances and you just want a better product, you should switch your mortgage. If you're going to experience payment pressure or you have other high interest debt, you should consider refinancing. The absolute worst thing you can do right now is a passive renewal. Signing your current lender's initial offer is easy, but it's not optimal. Reach out and take the time to shop around and really weigh your financial goals for the next 3 to 5 years. So if your mortgage renews in the next 6 months, now is your window to make a good financial decision. Rates are higher, debt levels are higher, but you still have options. If you want help in reviewing your renewal or comparing a renewal versus a refinance, don't hesitate to reach out. We have strategies to help homeowners in almost any situation. And if you want more clear, practical mortgage advice with no fluff, follow Matheson Mortgages.